Hello everybody, hope that you're doing very well and welcome to this evening's Contenders live stream. Going to be a good one today, going to go through fixed ranges for you all. I'm just before I started this video, I was like having flashbacks to last week where I was like, welcome to a technical analysis. Definitely made sure that didn't happen again. So yeah, I'm feeling good, hope that you are all doing well too. Obviously off the back of a little break for myself anyway, being Easter holidays, and I'm sure many of you also had a little break from trading. Or if you didn't, then I hope that you had a brilliant time trading it. Obviously, it's been pretty choppy over the last week of Bitcoin. You know, fairly choppy during day trades, okay? But in the grand scheme of things, like the ranges have been trading well. So yes, it's nice to go over the fixed ranges today, and I feel I have just like. I love it that when I'm discussing something, it's just off of the back of a trade that I've been able to take using the tool that I'm covering. So today I have just an absolutely perfect example of how to use the fixed ranges and how that straight away can convert into making money. So that's obviously brilliant that I have this for you tonight. Yeah, so fixed ranges is the main focus. I want to start with ZRX chart of the week, which is hit entry. So I'm in this one. So ZRX chart of the week, and this is off of the back of the website, the video that I put on the website last week sometime. Okay, so last week sometime I made a video for you all, put it on the bonus section of the website. So make sure you watch through all that video. It's about 40 minutes long, where I go through my altcoin list. And basically explaining, or not really explaining because I wasn't speaking, but just going through charting some altcoins, and ZRX was one of the ones I had a high focus on, and it was about the channel. So you should already have a heads up of this one. And if you haven't watched the video, and yeah, so I want to start off with that, then go on to fixed ranges and you know how I trade them, and then I want to end with some bonus questions that were asked in the chat earlier today, and they get asked regularly, so I feel it was worth taking the time to answer these questions on the live stream tonight. So before I begin with this, let me just take a quick drink. So yeah, before I start with with the content for tonight, I want to just do a few like a bits of announcement or news, so to speak, before we get into the content, rather than doing it at the end. It makes sense for me to do it this way. So yeah, there's a few things that you might notice a little bit different in the Discord. Obviously we've been changing things around here and there. We're trying to have the best user experience possible, and obviously you know, with time and feedback and comments and etc, we can, you know, try and make things better. So there's been a new structure of the place where this is open for change as well. So this currently isn't set in stone by any stretch of the imagination. So this is just for at the moment. I've put it in here, and we'll have to see what it's like, because you can obviously in the champions group now there's a lot more sections. So I'm trying to cut down on unneeded sections. So the trading updates, what I've done today, you might have noticed that there was no trading update posted in the champions group, and I'm putting them at the moment under the players section, and then just adding players, contenders and champions. So to view the trading update once a day, you'll just have to come across to this trading update, and then I'll remove this one in a few days, just so people are aware that it's this. And so then there's one less section in this to make it a little bit less confusing, so to speak, or there's just less sections to get confused or lost in. So yeah, that's one thing that I've done. The trading updates will be posted under this players section, just like where the bonus books are. So a lot of people have never seen this, but yeah, it's under the players section where I keep this, and that was another reason we just didn't want to have so many sections within this where you could get lost. So the trading updates will be posted in here. You can come in here and view them every day. So that's the first bit of information that I wanted to give you, the new location of the trading updates. I'll remove this one tomorrow, just so people are aware that it's being posted just under the players section, but still available for everybody. Okay, the next bit of news that I wanted to go through was the fact that there has been like some suspicious activity, or just suspicious kind of messages, or just unwanted and not kind messages, and this is just part of life. Okay, so as I said before, you know, there's always going to be rotten apples. You know, not everybody in life is nice, as you all know. So unfortunately, yeah. Oh God, I got an update. Let's go remove that. Yeah, so unfortunately there has been a few people that have entered the group for reasons of not wanting to learn anything about technical analysis, and just trying to annoy, and you know, just that kind of stuff. So I want to just make you really aware of, if you're receiving like direct messages, so personal messages from people in the group, and you finding this annoying and it's got or it's unrelated to technical analysis, or it's just an annoyance for you, or they're obviously messaging things that are classed as like somewhat like breaking the rules sort of thing, then please report any of these activities or DM messages just to customer service. Okay, so just write a message to customer service explaining what the problem is, and we'll get that sorted as soon as possible, really. So obviously the last person that has had to be removed was this guy and that was from a lot of people all reporting the same sort of thing, and then we obviously have taken a look into it and reacted off of it. So if unfortunately there are still some like people left in the group that are like this, just report them, and obviously everything will remain confidential. We're not going to like give out names of this is what's being reported to us by this person, anything like that. It will all remain confidential, but yeah, there's just another thing that I wanted to make you aware of. If you receive anything that you don't really like, or along with any constructive criticism, suggestions, everything at all, just send it across to customer service, and we'll honestly take a look at that. So then the last thing that I wanted to be aware of is we are making in the steps of making a new website, and this is to better the experience for everybody. We feel that there is a lot of improvement to be made on our current website. It was very much just a website for, I don't know, it was just a website, but we feel there's a lot of space to improve upon this and make it easier, rather than just going straight into the deep end sort of thing, having a better structure to the website, making it easier to navigate around, as well as just like a learning structure for yourselves. So we are making a new one, and that should be coming shortly. So that's to look forward to as well, and it should just be better for everybody. And I guess I would like to, as this was the most recent post here in the Bitcoin chat, I'll make you all aware that I just would like to give a real big shout out to all the members that have been like helping each other. Obviously, when I was just saying about the few rotten apples in the group, that we've removed, and then like the 99.9% of everybody is absolutely brilliant. It's obviously so nice to be in here, and to read through all of these comments from people today. Everybody just helping each other out, giving ideas on trades. It's just been an absolute. It really is a joy to read through. Okay, it really is nice. Okay. So I just wanted to like start off by giving a shout out to everyone in the group that has been doing really well. Shout out to Ball, doubled his accounts in 6 days, as well as everybody else that's just been helping each other out. So that's the kind of community and spirit that we love. And another quick announcement, I guess, before we begin, is that Igor, who's probably in here watching this right now, is going to be joining me on a live stream very shortly. And this is primarily to cover Attas, because there's been so many questions about it. So, I'm going to be bringing Igor on a live stream for you all, where we're going to be covering that. And as I've like mentioned here, like it's just, I think they should be like used as it should be so inspirational for maybe some of the newer members, or even people that have been in the group for a while but haven't had the time to probably study. But it's just should be so inspirational for you to see members such as Mike, to see members such as Igor, and there's a whole list of others, but I'm not going to go through all the names. But it should be really use this as like really good inspiration. These people have joined the group as somewhat like poor, low standard of traders, and really studied and worked very hard, and now they're regularly making money. I've seen the results, and they're actually doing really well at trading. So this should be like I believe it should be really inspirational to really like results right in front of you, to see members that have joined with like little trading knowledge to build themselves up over the course of a year, coming out with really good results. So that's powerful. And I'll happily bring Igor on a live stream with me, and we're going to be covering that. So that's to stay tuned for. And there we go. So that's all the news and announcements that I wanted to go over. So now I'd like to go over ZRX, this chart of the week here. Okay, 1 second. Let's see. Yes, everybody is here. Cool. So let's begin. So ZRX chart of the week. This was obviously one that I've done in this video a while ago, and there was a few things that I had in mind on this one. Obviously, if you can cast your minds back to that video I made a few weeks ago, and I had my eye on this Gartley pattern. Okay, the Gartley pattern obviously would bring us down to lower levels. Okay, lower levels, low of the channel, at least the lows being taken. But as I was like writing in the video, keep an eye on this channel. Okay, specifically this channel, obviously here. If we actually break and hold the channel, then it's like one of those things. There's no point in me looking down to these lower levels if we can flip the resistance turn to support. Okay, and we have started to do this. It's no by no means definitely a home run from here, and we are heading up. So it could definitely still fade down from here. So I'm in a long position, but I'm still very much aware, I could take a loss on this one, and if we do, I will be looking, over the course of the month, for this to head down for the low of the D, which I feel offers a really good opportunity. But yeah, I wouldn't have orders waiting, but I feel I'd be open for a very good opportunity or for a long, if I'm presented with, getting stopped out of this one. But yeah, going over the setup that we have here, obviously we have, on the overall grand scheme of things, a really nice range. Okay, so we have this really nice range that's going on, and we broke out of the range very bullishly. Okay, we obviously came back here and we have formed somewhat of like an upward sloping channel, and my entry recently, okay, was taken off of this. Let me load up so this is what my viewpoint was yesterday when was this yesterday? Yes, yesterday. When I was posting it, okay, on Chart of the Week. So it was obviously we had just broken back up above the range, okay, and for me this was like leaning into an opportunity. I was expecting a slight pullback on Bitcoin, obviously, and I was, with the pullback on Bitcoin, one would naturally expect altcoins to pull back. So it was a nice opportunity to see them pull back together and expect bounces together almost. So actually has played out pretty nicely. So we got the pullback of BTC, and we also got the pullback ZRX. So I was looking for basically for it to pull back one more time into, so here you can see a little bit of the order block theory. So you have like this order block under 1 hour, you have the CC, okay, and you also have the top of the channel all come together. So there's like three different confluence levels to take this long position. And you can see how nicely it really works out. This is on the 15-minute chart, but nevertheless, you pull back into this level, okay? You bounce off the top of the channel, bounce off the top of the channel, bounce off the top of the channel, before you eventually get one quick move down through it, okay? It's never, ever going to hit your stop loss. You shouldn't be getting stopped out on this, 100%. So obviously you get one final push through the level before coming back upwards here. So this is being moved up now currently by about 1.8%. So it's in decent profits. 1.8% for a day is impressive for a move. Obviously, this CC that you can see that I have here is from this print screen that I had here when that was the high of the time. So at the high of the time, that was obviously where I was looking for that CC. But obviously, as you should know, we did make a new high from there, so that can be adjusted. So yeah, so now I'm obviously in this long position. Like, what am I looking for? What would be some red flags? I'm looking for to take it just below the low of the monthly, so like a front run of the monthly up to this like liquidity area. Is where I would like to basically close out the position, where I'm expecting a bounce. It's hard to say expecting a bounce. I feel somewhat confident on this, but you have to remember, at the moment, it hasn't really got any major follow through. So until really you can break above the last high, so that high is coming in here at exactly 2535. Okay, so 2535 is the current high that you need to break. So until we broke that, I am slightly cautious on it. Okay, so I'm not going to be getting excited about this move up so far until we do, it's more likely to do something like this. And then if we can actually hold this break above the high, then I'll be a bit more, expecting some more decent follow through. So at the moment, it's kind of like, I'm happy with the entry. I am obviously happy with the entry, but yeah, I cannot say I'm like majorly excited by it until it takes that high. And then, yeah, I see no reason why we will not push up, to come up and challenge that monthly next, if I'm honest with you. So yeah, that's the setup that I'm looking at here. I guess what we can do, well, during the process of this live stream, I'm going to go over a lot of examples of different fixed ranges. So I'll save ZRX. I was going to do it there. We'll come back to ZRX nearer the end of the live stream tonight. Okay, so basically, yeah, long off the channel back test. You also had that 1 hour order block. You also had the CC on top of it. So you had like three different confluence levels. And as you know, like I've been like really stressing recently, that at the end of the day, trading is a probabilities game, okay? There's never 100% trade. You never know. You can never look at, 100 confluences, see them all come together and be like, 100% this is going to hold, we're going to break up. At the end of the day, trading is all about probabilities. But why do we look for like several confluences coming together? Because the more confluences that you have, the higher probabilities that level is going to hold. So we always try and look for several confluences coming together to have the higher probabilities in our favor. Why do we place a stop loss? Because we know that although we have good probabilities, there is no guarantees. So, risk management, stop losses, identifying invalidations is, so critically important to every setup that we take. But nevertheless, that's was the confluences that I was looking for, and you can see that when you see these confluences coming together, well, there is a bounce of already. Oh, sorry, I underestimated that. 3% nearly actually up. Okay. I mean, it must have been since the last time I looked at it, it was 1.8. So now, yeah, actually it's moved up recently again. So yeah, now that's 3% profit. So even better. And that's where we like to see, when you see all these confluences coming together, it absolutely could have just come down and stopped me out. But when you see those confluences, you have to execute your trades, and, just right now, you'll get rewarded. Over time. So yeah, stop loss for me at the low of the wicks, okay, and targeting a front run of the monthly on that trade. I guess I should have put this on first, the disclaimer. Make sure you pause and read through this. I'm just going to take another drink before we start. Sorry, I'm like trying to, some of you probably might be able to remember, my throat, does become a bit sore, and I do think it is directly linked to the live streams. So I have to try and take a lot of water, and I'm also going to try and lower my voice slightly because that also helps. So yeah, with the fixed ranges then. So fixed ranges, really, 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 really powerful tools. Okay, I have to say that fixed range is one of my favorites. Okay, it's just really, really good. And today I have some just absolutely, well, I have the most absolute perfect example. Period. Okay, so it would have been literally impossible to trade Bitcoin better. So yeah, it's going to be a nice one. So basically, the fixed range tool. It's very, 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 very similar to last week's VPVR ranges. Okay, so your visible range profiles. Okay, it's extremely similar. The theory behind it is the same, apart from I feel that this is times two. I like the visible range, but I must say I hardly, if I'm honest, I hardly ever use the visible range. Okay. So it was a nice one last week, and it's really good for like beginners, but the fixed range is like a level above it, and it's like times 10 better. Well, times 10. I just making that figure off the top of my head, by the way, but it's better tool in my opinion. So the fixed range is like the visible range on energy. It's really, really good tool. Okay. So I love this one, and I use it a lot more than the visible range. Okay, so I just want to make that really clear that this for me is the tool that I use. I'm rarely using the visible range unless I'm trying to keep it more simple, because the fixed range is obviously a somewhat higher level of use. Okay, it's harder to use the fixed range. I generally, when I'm using the visible range, it's just to keep things simple and just to make it very, very, very simple. Whereas the fixed range is the tool that I would personally be using more myself when I'm doing my own technical analysis. Okay, I don't use the visible range. I only use that for public video sort of thing. So yeah, the fixed range tool is very helpful when looking at an untested range to figure out the most likely point within that range that price is going to be rejected from. Okay, so as you will have noticed many times, price will not simply reject from the low of the wick, okay, of an untested range. So it's really important that you know the untested range, but we'll enter within that range and then reject from the point of control of the said range. Where I've got a lot of, I'm going to go through a lot of examples. The reason for this is, so you always have to, I'm adding this in, so you have to think of like the reasonings of why does price, why do you get support and resistance flips? It's not just simply because randomly we are suddenly moving up, we're getting a resistance, we're moving down, we're getting a support, we're coming back up, we're testing something, we're moving back down. Price is not moving randomly, okay, as many people would like to maybe say. Price is not random in trading. It is structured, okay. There you obviously can see edges of where price is going to, where price is drawn towards big liquidity regions and price is rejected from crowded trades. So it's clear that there is patterns in this market. Rethinking of the reasons why is an untested point of control such a strong level? Okay, the reason for this is all of the traders. Okay, so imagine that you have an initial range. So you have that initial range. You obviously have your value area low of the range. You have your value area high of the range, and you have your point of control of the range. Okay, from thinking back from last week, the theory is very similar to last week, so this shouldn't be so hard. But what you have to think is that point of control, okay, being the middle generally of the range, that's where the most volume was transacted. As I kind of would like to say to you all, we short the value area high, we long the value area low, okay, and we do not take trades or new trades off of the point of control. So when price is in the middle of the range, we're not entering new positions. We are staying patient to wait for a rise to short or waiting for a drop to long, okay? And let me just explain. So when you have those three, I hope you can see me okay, but when you have those three levels, the value area high, the point of control, and the value area low, obviously you're longing the value area low up to the value area high. If price breaks above the value area high, when you back test that value area high, you do expect it to be support, by the way. So the value area high can be like a support level when broken, and the value area low when lost as support and back tested, that value area low can be a resistance as well, by the way. So just to point that out. So yeah, basically when you get out of that range, the most likely place though that you retest is obviously the point of control. So what you have to think of, okay, and this will be easier for me visually to explain to you in a second, but the point of control being the level or being the price, okay, so the horizontal price where price has transacted the most amount of volume. That's because people are very poor at sticking to rules, or they just don't have a rules, okay? And you know, many people are obviously trading the middle of the range. They're trading the point of control. So as more of an experienced trader, we know this is not a good place to enter a position, but you know, 95% of people are trading the middle of the range, okay? And basically they're gambling. You have to think that many people trading gamble, okay? They just will trade off of an instinct, and they'll just buy because they believe in Bitcoin. They'll just short for whatever reasons. So a lot of people are gambling when it reaches the middle of the range. We know that there's no edge trading the middle, so we'll somewhat stay out of it. But many people are obviously trading the middle of this range, the point of control, and when you break to the upside or when you break to the downside, all of that massive amount of volume that's, you know, created the point of control, basically it's going to catch a lot of people offside, isn't it? So maybe everybody that has longed the point of control, that when price is then broken down, when it comes back and retests that point of control, everybody that has been in an underwater position, you know, they essentially guessed which way it was going to break, you know, when they're given a chance to get out break even, you know, they're going to snatch at that opportunity. When you see an account balance down like $1,000, let's say, when you get the chance to see, you know, back to losing 1,000 to getting back to zero, many people are going to psychologically feel that they've just made $1,000 because they essentially lost it and then they got it back. So, you know, psychologically people are attracted to getting out trades at break even, because it feels somewhat like a win, I suppose. And when given a chance to get out break even, they will take it. So the point of control is obviously showing where the most volume was transacted within the range. Thus, when revisited, the most likely area to show your resistance support. The wicks will be where new money is likely trading, whereas the point of control will be where previous traders are getting out. So let me go through this example here, or let me just think about this. So yeah, I would like to just go in a bit more depth actually thinking about it before I go over this. So let's go over to, let's just pick a random chart for example. So let's just pick something which I know, so like ZRX. Okay, so what's really important, okay, WRX here, sorry. So what's really important to realize, okay, is that when we have these levels, so here is just our standard candlestick chart, okay. What's really important to know is that when you are looking at the chart like this, okay, so most people are going to view their chart like here, really, aren't they? They're going to have their volume bars at the bottom, okay, they're going to have their volume bars here, and they're going to have their candlesticks here. Okay, so what can we see from this? Okay, what we can see is, okay, so very simply, what we can see, let's just remove this a second. Very simply, what we can see is that there has been long lower wicks, long lower wicks, long lower wicks, very high volume here, very high volume here, and very high volume here. Okay, so we're seeing like real 3 big spikes in volume. But what this does not tell us is where has that volume come in. So let's say we have a really big candle. Let's say we have a really big candle like this, really. And, you know, we've seen a lot of volume coming on it, but the candle is really big. So what you do not know by looking at this is, has the volume come in at the high? Has the volume come in at the low? Or has the volume come in at the middle? It's literally impossible. It's impossible to know where the volume has come in when looking at this chart. Hence why looking at a standard chart like this is giving you, I guess, not really a disadvantage. It's just giving you you're not getting the advantage of being able to read charts such as like exo charts, for example, or a footprint chart, where you can actually see within the candle where the volumes come in. Has it come in at the highs? Has it come in the middle? Has it come in at the lows? Okay, so footprint charts are obviously designed to give you that advantage to know where the volume has come in. And obviously the fixed range tool is helpful to also look at this, because then we can see, okay, so if we're looking at this as our fixed range, okay, so we obviously can't see individual candle stats, but we can see, on these higher wicks, okay, so specifically on these higher wicks here, we can envision there has not been much volume trapped in the high of these wicks, because the volume, as we can just see visually, is very, very low near the highs. Okay, and down here we've obviously seen lots of long lower wicks, but we can envision that there's not a lot of volume that's actually supported price down here. Okay, it's just more of a lack of sellers, okay, that has got the bounce back. So more of like, envision it like an automatic rally. Okay, so the automatic rallies off of like accumulation distribution ranges from Wyckoff's theory, you get the automatic rally from a lack of participation from one side of the market. So that's all you can see here, that these tools are very, very helpful because of the fact you can actually see horizontally where volume is coming in and not. Okay, so footprint charts, which we're going to get to in the coming weeks, are obviously another step ahead of fixed ranges, to be honest. But nevertheless, the fixed ranges is a step ahead of just your standard volume, because this is not telling us, this is not really helpful to us. Really, it's nice to know, yeah, great, volume come in on this candle, but did it come in at the lows, the middle, the highs? You need to know that, really, to know, because that's where support and resistance is. You could see the low of this wick and you might think, okay, if we break down, I'll want to see this retested to come back down. But if there was like really low volume in this wick, then you would not really expect this to be a support and resistance. Let's say all the volume came in here on this section of the candle, then you would more expect this, if we break down, rather than retesting there, you're more likely to expect there before down. Okay, so the volume where the breakdown has occurred, or the high volume within this area, is more important per se than like just where the low of the wick is, sort of thing. So you're more likely to see something like this if you break down, for example. Yes, the lower the wick, you are going to get the new money coming in, but the majority of the time you'll retest that before down. Okay, so it's not like I just wanted to hopefully that's made sense. If not, then please ask a question at the end and I'll explain that again. But knowing horizontally, or the actual price where the high volume is massively important. Okay, you get a really big advantage by knowing that information. So yeah, if that doesn't make sense, ask a question, but I'm going to continue. With a really nice example here that I have on Bitcoin. So this is literally from yesterday. Okay, so as you all know, if you're in the Champions group anyway, yesterday I was looking for a drop in price of Bitcoin. Okay, and so firstly, we can go into why I was expecting the drop in price, but really simply, we had this was an area of resistance. So if I load up the Bitcoin chart a second. Okay, so if we just load up this, and we can just go over to make it look similar, so you can see that this is basically what I had going on my view yesterday, that I was looking at this fixed range. I was looking at this fixed range, and I'm going to explain shortly why I've chose this as the fixed range, obviously, but this is what I was looking at yesterday, this fixed range here. And you can see I've horizontally extended it. You have to do this manually, but I've extended this line manually, basically, to give me a big level of support resistance off of this. Okay, so if we just then see basically how this is played. Okay, so what we can see is if we just extend this line from the point of control outwards, okay, and come out, then what we can see, sorry, let me just gonna need to do this. This is a slight glitch that you have on TradingView. On TradingView, there are slight glitches that if you actually go off of the chart and back on the chart, you have to redo it. So this is the one bad thing about TradingView. But let me just do this for you. So basically, what I'm looking for, I guess I can add this in. So places where we select the fixed range tool, or how I like to select fixed ranges, because I'm going to have to do it again here because TradingView glitched. So basically, why am I going to be selecting these certain points? So for me, there's a few ways that I like to select my fixed ranges, and I'm going to go over this in more detail, but just annoyingly I have to do this again here. So basically what I like to do is, obviously what we have here is So this is clearly our range. Okay, so we can see that this was a previous range. So that was a previous range here, isn't it? So we're ranging before we break down, and after this breakdown, this is where we then start a new range. Okay, so working our way backwards, what I would do is envision, okay, this is a place where I would take a fixed range. Okay, I can say the point of control of that range is 7118. Okay, but we are now out of this range, and what we've done is we've broken down, and then we've moved sideways for consolidation before breaking down again. So what I'm looking at is this consolidation period. I want to know the details of this consolidation range. Okay, so if we revisit this consolidation range, it's likely to be a support resistance level. Okay, because people are going to be reacting off of this. So what I will do, fixed range, and I'm going to have to go through a lot of different examples, but what I generally like to do is the first wick that starts the range to where you break down out of the range. Okay, so you can see here I've started my fixed range where I see the range actually beginning, and then I've put the end of the range to the candle just before we break down. Okay, so just before we then move out of the range and we work on starting a new range at the lows. Okay, so I'm going to have to go through a lot of examples to explain this in more detail, but nevertheless, that's where I was getting this line from yesterday. Okay, so from the start of that range to the candle where the breakdown begun. Okay, so where the breakdown, ended. Okay, no, the breakdown begun. I was right the first time. So I've started my fixed range. Let me just explain this one more time. I've started the fixed range on the candle that started the range, and I've ended my fixed range on the candle just before the breakdown of that range. Okay. So then this is giving me the point of control, value area low, value area high. Okay, so I hope that has made sense why I've selected this as my range. And the other range that I have selected here, okay, of the level that I was actually, I will explain that now. Let's go over this one. So the other range that I was selecting off of this chart, okay, was very simply our range from back here. Okay, so our other range was from here. Okay, from where and we can do this once again. So where the breakdown has, here we obviously break down. We start our range on this candle, and where would you say that this range has ended? I would say it's here off of our daily. Okay, so I hope this one makes sense to you, because this is maybe not as slightly obvious. So I would say that, here we obviously were bouncing around off the daily. So we can clearly see here the daily was resistance, an area of resistance before we finally get this move. This candle right here back tests it and we break upwards. We're clearly out of the range after we get this back test. This back test is what got us out of the daily resistance. Okay. So what am I doing here? For where I'm viewing this range is where the range begun. Okay, on this candle to where the range ended after this back test and move up. That's where I was getting the level from yesterday that I was telling you all about. Obviously around 6688 was the one that I was saying to everyone. So you can see I was getting this point of control, okay, for the top, and I was getting this point of control for the lows. Okay. And then this is obviously what I was writing in the group yesterday. So I was saying, I want to see this drop to around 6,688. Okay. Do I plan to take a long? Yes, I do plan to take a long. Okay. This was obviously why we were sat around 6,000 and 6,950. But I want to see a drop first to 6,688. That were my words. And this is how it played out. So this is the original, idea that we can come up and test this point of control before seeing that drop to 6688, and then this is how it played out. So that was our fixed range that I showed you here, and then 6688 was our fixed range from here, and this is amazingly how it played out. We got the move up to the fixed range point of control to the exact dollar, okay, to the exact dollar point of control high. Okay, you can see that. Absolutely amazing. We got that push up one more time to the point of control high, and where did we come down to find support? Off of this range's point of control, basically to the dollar. Off the first touch, we then got a swing failure and another push to the upside. I mean, I just felt that this was such a perfect example, okay? Because of the fact, when you look at this, you can see here how you do have the low of the wick, okay? So we can see the low of the wick on this line. Okay, so you see the low of the wick on this line. Originally, you got a rejection. So you did get a rejection on the low of the wick. But all it led you to was one more push down before, we did come back up and test that point of control, as you can see here. Let me just emphasize that one more time to make it really clear. Okay, you can see the low of the wick did offer an original rejection, and there's no guarantee that we were going to push up for this point of control. It's just likely because of the fact we're making bullish market structure. There was no reason, at this moment in time to be short. There was no reason, there was no reason. So, you reject off of that level, which was, you also did have 618 confluence on this touch, by the way, but you never lost the market structure, You never lost any key supports. So obviously you're building your way up here in some, form of a channel. And so what we done here, we reject off of the low of the wick first, but we come back down, we make a higher low, and we work our way back up. And where do we reject from? This fixed ranges point of control to the exact dollar before making our way down and bouncing off 6688 to basically the exact dollar here, rise, liquidity, push back up into this ranges. I'm actually going to have to check this in a minute, but maybe this ranges point of control sort of thing. So that was just an amazing example that I was going from, I was obviously trading this live yesterday, and then how amazingly well it literally traded out from wanting it to come down to 6688. So that is being able to short highs, long lows, pretty amazing stuff. And that is just off of fixed range itself. Very, very, very powerful tool, as I'm sure you can totally agree with on this. That's live, just evidence right there. Just amazing how amazing it can be. So you can use this across all time frames, but as with all technical analysis, it is easier on higher term time frames. I'm just going to take a drink. I need to lower my voice. It's because I get excited, I get really excited when I'm talking about something, because I truly believe this is going to help so many people, and then I get excited, and then I start speaking louder, and then I need to calm myself down again, because otherwise I am going to have a really bad throat again. So you can use fixed range across all time frames, but as emphasizing here, I've now realized I've repeated it, but as with all technical analysis, everything's easier on the higher term time frames, so identifying ranges on the 5-minute chart, like I've done here, is obviously harder than identifying a range on a 4-hour chart. 4-hour charts, it's staring you in the face. It's very easy, but all technical analysis is harder on the 5-minute chart or scalp trading. Why is it harder? Primarily because you don't have time to make plans. You have to be really, really reactive. When I'm scalp trading, for example, I'll be looking for a long off of a certain place, and I'll maybe enter a long and I'll be out within a few minutes if I don't see the right reactions. You just have to be very, 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 very active and on the ball when you're scalp trading, really, really, really focused. Whereas when you're swing trading, you can enter a position, leave it a day, forget about it, and it hits, and you either get stopped out or you make profit on the trade. It's very relaxed, easy style of trading, whereas scalp trading is 10 times harder than swing trading, if we're honest. But obviously the technical analysis is exactly the same. You use the same technical analysis whether you're a swing trader or you're a scalp trader. So the theory and everything is the same. It's just the emotional and focus levels are massively different. But fixed ranges, easier to trade off of the higher term time frames. But yeah, absolutely used across all time frames. So another thing about this is the first touch of an untouched point of control is always the strongest. So here, the first touch you can see is clearly strong, and it rejects you totally. So that's funny. But here you have the first touch, the second touch. You can touch it again 3 times and bounce, but if you start touching this 4, 5, 6, it's clearly going to be weakened and weakened and weakened before you go through that level sort of thing. What's really nice is that's kind of it. It's the same with all technical analysis. The more times you touch the level, the weaker it gets. So if you start bounce. You know, I would trade they're known as naked pointer controls. Okay, so if you get like an untested naked pointer control, the first touch of it is a fairly strong odds. If you like knife catching and like presetting orders, you have fairly good. Obviously, you don't want to do this alone. Okay, so if there's zero confluence on the level, you're not just going to be longing every pointer control and shorting every pointer control when you go into the level the first time. That is definitely not how you trade. But you know, if you see on each of these levels there are confluence at these levels to expect a bounce, then yeah, these are levels where you can preset longs, preset shorts. When you see like 2, 3, 4 levels of confluence on a point of control, you know, they are really strong areas the first time. Okay, so it could be something like this, for example, that we hit this level and, you know, this results in over a 1% bounce, and for like a day trader, scalp trader, 1% bounce is absolutely amazing. That's literally one trade done, you're done for the rest of the day, you know, done for the rest of the day sort of thing. You could even make a week's amount of money off of 1% gain. So, you know, that is a good trade. But what you have to think is that if we then do this, you do your trade, okay, you come out maybe on this point of control and now you reject, you come down again and again, you know, we're going to be less likely to continue to want to trade this level because you're touching it more and more times. So the first touch into a level, really strong, okay, and you can see how strong it is. First touch, total rejection. Here you get the first touch, weak. Here you get the liquidity run, you know, it's fairly weak. When you see the differences, this is clearly strong resistance, whereas this support, you know, it's support clearly because you got a 1% bounce, but it's not as strong, is it? So what we can say is just really simply saying, well, this is a really big resistance. This support, we could argue, is not as strong support because the reactions off it are a lot weaker. Okay, if that makes sense. This one you touch and you get really big rejection. You're more likely to short that next rise because, you know, clearly this is a big resistance. But on this one, are you going to be so keen on longing? I mean, yeah, absolutely. The first touch it goes into it, yeah, you can preset your long and do a trade. But the more times that we touch this, it's just one of those things, just general TA 101, I suppose. Like the more times we test it, the weaker it gets. So yeah, this is now what I want to emphasize is, or really just show. Okay, so as I keep clicking on that. So as I shown here, you know, it said here, I'm going to have to go through this now with charts in real time to show you how I use this tool. As honestly, for me, it's one of those that's really difficult to make like a cheat sheet about, because it's just kind of like it's like just one of those things that when you do something for so long, it just becomes like natural, and you just are seeing the ranges. And without thinking, like it's really hard for me to describe, but I'm not like actively thinking so much like, I have an exact rule for where I'm doing the start of my range and the end of the range. Obviously, I've tried to make it where the breakdown starts and ends, but I don't have so much of like hard rules where I'm putting my fixed ranges from. It's kind of like intuition, and it's just having like the feel for where these ranges are beginning and ending. So it's hard for me to then make a cheat sheet about it, because it just feels so natural when I'm doing it. So I feel the best way to explain is literally just by you having to watch me, and I'll go over some fixed ranges and pull different ranges and show you and explain in the time where I'm pulling those ranges, why I'm pulling the ranges, if that makes sense. So let me take a drink and we'll do that. Okay, so yeah, so here we can say, well, where would I pull some ranges on this? Let's start on the 4 hour time frame. Okay, so for me there are a few key levels here, support and resistances, the areas that I would look for next. Okay, so if we're looking at support, okay, so let's say we envision price coming down, for example. If we're looking at support on the way down here, and we're just looking at a plain chart here, where would be the range? Or I guess you can think to yourself first, where would you pull the fixed range from here? If you are looking for support, where are you going to pull your fixed range from? I would say there's two correct answers here. There's two correct answers, if we're honest. Where would you pull from? Think of it for 10 seconds, and then I'll explain where I would pull mine from. Okay. Okay, so now I'll explain. So I would actually do I would say there's two valid ways of where I would pull my fixed ranges from here. So firstly, what we can see is this was like a range, okay, somewhat of a range here. Okay, so we had our, you know, support, resistance, support, resistance, support, breakthrough sort of thing. And then you come up here and make some new highs. So just like visually thinking of it like that, I would say where I would pull this fixed range from for me here is actually where we move up here and we start to get rejected. I would be pulling my fixed range from here. this is where I would do mine, because I'm interested in this area of the chart. Why? Because this is where for me the range started. Okay, so as we moved up, people have started transacting here, trying to envision continuation, I would imagine, or shorting, expecting, you know, a fall down from reaching this high. So this is where people are going to be drawn into the market. And then on this candle is where we kind of start to push outside of the range. It's a big push, you know, a big hourly candle where then you get continuation. So I'm interested in all the traders that were trading before this in this section. So this is where I would be pulling a fixed range from. Okay, and then we could be marking out a few things. We could mark out the value area high of this range. Okay, we could mark out the point of control of this range, and then we could mark out the value area low of this range, for example. Okay, to give ourselves some key levels. As we know, this is the biggest one, the point of control, so we can just really leave this on for now. So that would be one range that I'd be putting. What I might be inclined to extend it, okay, slightly to this candle here as well, because of the fact that this was our really the last candle before we broke out of that range, if that makes sense. So I would accept this as an acceptable answer as well, if I'm honest, as a point of control for an area of support. I would say both of those areas for me are correct. Okay, one is more of like an aggressive entry, and one is more of a relaxed entry if we break down from this range. As we all know, 6,600, okay, really big support. So this one also makes sense in that regards. And then if we kind of break out of this, well, then I'll be more interested in this one. You know, it's kind of level to level. This is a really big support, and there's no need to look down to here until you lose, as you know, that double bottom 6,600. If we do something like this, oh yeah, then that's why I'll be looking down to 6,200, as you know, because that's for me is then the next level. I trade it level to level rather than, you know, anything else. So that would be two ways that I would say are acceptable fixed range pulls on this price action, looking for support. Okay. I guess like the other one that's really obvious that you could do is literally all of it. Okay, so from where this breakdown, where we kind of had an initial really big breakdown and started ranging, so that's another one that I would do. Well, look at that actually, so that's pretty cool. We are sat on that overall really big point of control, so this is clearly a really big support level, as you all know anyway. Like 6,600, really big support. Okay, really big support. If we actually start breaking down from here, yeah, it's likely, well, look at that. So then we've got the high volume node obviously coming in here at that previous range point of control. So again, you have 6,200. You lose then, if you lose that again, well, it's really likely you're gonna you got really little support down here. Okay, so this is the thing. You might look at this and be like, oh, look at all this volume that's come in here. There's got a lot of support, so for example. But what you have to realize that the volume's getting transacted here and here, and down here there's support. You know, it's going to be there obviously, but it's not going to be amazingly strong support. Okay, so your amazingly sort of strong support is this sort of 6.2 6.6 level, and if you break down from here, it becomes a lot more bearish. But while you maintain these levels, you could say that this is more bullish, you know, in the short term anyway, because we're holding really key support levels. So those are the ones that I would look for resistance. And then for looking at, looking for support and looking for resistance here, I would be looking at a few key areas as done earlier. I would look at this as a key resistance. I would kind of arguably say I would start from here to here. Okay, so that's coming in at 7,317. 7,317. Why have I selected this range? Okay, so make it really clear, hopefully anyway. So I would say we're like kind of pushing up here, and this is our first rejection before we come down, come back up, down, up. So this is my area where people have started transacting going into the short side. Okay, short and longs. So then we are ending at our range at this candle here, because that's when we have them broken down outside of this range. Okay, so if we're envisaging this then as our range sort of thing, well, this is like kind of where it starts. Okay, because this was our first rejection. Okay, then we come up for a high, low, high, low, high, low, high, and then break down. We're ending it here because this is where the breakdown kind of began. Okay, and we're then clearly not trading in any type of range at this point, so that's why I would select those points. Another place where I'd be inclined to select from, okay, the difference is going to be really small, I would imagine, what would actually be on this candle, because for me, okay, actually I would be more inclined for this candle, because of the fact, as you can see, it's not like a science. It's really not like a science by any stretch of the imagination. It's more like yeah, just like testing and seeing what looks right. But because of the fact we've got here support, and then our clear resistance, you know, this is where that kind of, when we can say, well, it's kind of in the name, I guess, fixed range. So we're looking at the ranges. We want to see the volume of that range. So the range really began here, where this was our range low, high, lower the range, higher the range, lower the range, higher the range, breakout, okay, or breakdown. So it would also make sense, and you can see here, so this point of control 7312, so what, like $5 difference. It's not really going to be any different at all, you know, in this time frame. So yeah, it wouldn't really be to, you know, really make any difference to you actually if you selected here or here. The difference is like $3, but yeah, those would be the two areas that I would say are like acceptable to pulling your fixed ranges from for looking at resistance. And then on a bigger picture, I would then be looking at this, okay, as my next fixed range. This candle, after where we kind of got the breakdown to form this range, to the candle where we just before we broke down, and you can see that point of control, which I would mark out, is coming in at 7835. And what I like to do is just sometimes just do this and put on just start by key, and then just name this to point POC. And then, for example, I can remove that and say, well, it's less likely that we just reject off the bottom of this wick and come down, but more something like this, okay, if we make it up, just a high sort of thing. But this is a key resistance area, okay, so that's 7835. So then that's how we'd be looking for then like a key resistance on this chart. Okay, so let's go through some more examples. Let's go through basic attention token. Okay, so basic attention token is another nice one that we can like go through here. So if we are currently just looking at the range that we're in, I would say it's pretty clear. We're getting resistance off of the monthly, support down at around around this sort of weekly lows. Okay, so our range here, okay, so we're currently still within this range. Okay, so I would say we kind of started this range. Really, the range has began here and we're still in it. So this is a range that we're currently making. So we really want to see this kind of start to claim the value area high. But if we move back down to the point of control, you can see that it's going to be like a support, resistance, support level. Okay, so it's an SR flipped level of this. Okay, so this is helping us to trade in the range that we're currently in. But if we break out of this range, well, where can we expect resistance? So this one is actually a little bit harder. Now I see this. This one is a little bit harder for where we can determine. There'll be a few areas where I'll be interested in pulling from. The first one would be on the bigger grand scheme of things, really all the way back from there to where we kind of broke down, and that brings you to your point of control 2518. And then I would do one more for a little bit of a local view, more locally, because I'm generally more interested in, you know, I'm a kind of a smaller term time frame trader, so I'm more interested in what happened more locally here, and I'd be doing this as my other pull. And it's more or less the same level, but 2642. Okay, and that's why have I selected these levels here. So this is where the breakout sort of began, and we can see that this is where we had our range going on here, and this is the candle where we broke out of this range and we started to form this newer range below this range. Okay, so I'll just pull that one more time. So this is where my range for me it began, and this is where it ended. And look at that. So this is like the confluence that I love. This is confluence that I love. Value area low on the monthly. So what happens? We obviously find acceptance here. This is how you range trade. And this is a really nice example. This wasn't pre-planned. I had no idea I was going to do that, by the way. But yeah, this is obviously a bit of a range that we had going on here. Okay, constricting price action. And then you break out, and then you move down. But so this is known as acceptance out of the range. As you start closing below the range, okay, so if this was our range low, this was our range high. As we start closing below the range here, clearly there's acceptance. So this is acceptance below a range. When you close below the range, you even get a back test and you come back down. This is now clearly accepting. People are accepting price below this area. So now this old range is now viewed as really high value, because this was previously overvalued, this was the fair price, and this was a discounted price. But something's happened in the market for now people to view this as a good price, and now the old discounted price is viewed as expensive. You know, thinking of it like that. So what once people viewed as a really good bargain, something's happened for now people to think this was a bargain to this is really expensive, to put it in like a simple terms. But obviously we're just thinking of it like, okay, so this is clearly our old support of the range and now is into resistance sort of thing. But this is really, really, really big confluence. This was a monthly level, but our monthly level sits on a old value area low, and as you know, value area lows can turn into resistance, and when you have that on a monthly, yeah, that's a really, really nice confluence. So now we are making our new range using resistance as the old value area low. Okay, so that's really, really nice to see, actually. So now what we're doing is we've got a new range going on, and we can see, well, this is where we kind of got rejected to where we are now, and then we got our value area high of this range, we got our point of control, value area low, very, very close indeed, actually. So yeah, that's big support coming in at around 22111, and yeah, clearly resistance is coming in at that monthly old value area low. Okay, so yeah, there is that. Let's go over some more. So let's just do, like, I don't know, EOS. So clearly it's pretty clear on this one. We are very clearly inside of really this range here. So we have our value area high, value area low, point of control of this range. But if we're looking as resistance when we break out, there would be a few places actually where I would pull here. The first one would be here. So I wouldn't be including this section. This is where really we went more sideways. Like, this was still the downtrend. So here we're going downtrending. Okay, so for me this is downtrend, and then this is where the downtrend ends and we go sideways. Okay, and then this is where we get the support resistance. This is our low, 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 break from the low, back test, new range formed. You know, it's pretty easy. So where am I going to take my value area? This for me is ranging. So this for me is trending market. This is downtrending. The downtrend ended here, and we entered a range from this candle. Okay, so I go one after that. So on this candle here is where the range really starts, and this really for me is where it ends. So this was my fixed range. Okay, so this is where I'll be looking for. We then have the point of control, big resistance coming in here. Okay, so that would be our big resistance if we make it up this high. Okay, we can also mark, you know, you do want to look, and again, you wouldn't just look at these levels on their own, but you can see where's the most confluence. Okay, but you can mark out those three levels, VAH, VAL, and POC, and see where the confluence is to make an informed trade. Okay, of which is the most likely to reject. So yeah, that's how I'd get resistance for my point of control ranges, and why I wouldn't select from back here, because this for me is where it was still ranging. This is where we went sideways and would have built up transactions. Okay, then obviously this is going to be a range, and for support, okay, we don't really have like a massive support to go off of because we've just been ranging for so long on this. Okay, so yeah, there would be no more really wide pull for support. Okay, only that one that we're in locally. Another one, let's think. Can we do Tezos is a nice one? Yeah, I suppose Tezos would equal a nice example that we could pull here. So, you know, really this is not trending, is it? This is like sideways market action. So we can pull a range from all of this. This is why a really impulsive move from that low to where we broke. So I'd say that this is a really big level. Okay, and value area high. Okay, so this is pretty nice. You can see here from that value area high, actually, that value area high. And what was the confluence on this? So you can actually see here pretty nice that this was an old support, resistance, broke, you know, you break through, back test, and then you move back up again. So that's clearly a nice, like, confluence level. You can see here visually, you don't have, I mean, you do, but you do also have this. And I imagine, like, if you pull just something really simple like a fib, okay, you would have had, okay, so you had around the 0.5 fib. I don't know, nothing majorly that I can see off of that, but nevertheless, this was a trade more off of, now I'm going to get a little bit off course, but as you know, this was our trade that we were looking out of on the grand scheme of things. This was off of our point of control, this was off of our 618, this was also off of the 1-to-1 extension. Okay, so we had the confluences to expect this to bounce, and that this was not to be expected to come down to the point of control because of this is the thing. So this is actually worth covering, I guess. Again, context. If you are coming off of a really big support level, okay, so if you're coming off of, okay, really big support, okay, like this 6-6 on the 1-to-1 extension, you know, if you're bouncing from a really big support level off of the swing failure bounce, if you're getting that really big follow through, you don't expect it to pull back so hard. You know, there's no reason why you'd think this is going to be the level where you bounce, but instead you kind of are using context and you know, thinking, well, why would you pull back all the way back here if we're getting a really bullish bounce? Okay, it's unlikely because of the fact we're bouncing at really big support. it's unlikely to get a really big pullback, So, that is where context is important. That was why we were more likely to bounce off value area high, because of the fact we're out bouncing off of a really, really big support with strength. So it's more likely to find support off of like value area highs, or higher like fib levels when you're thinking about it. So let's see what else. I don't know, Decrid. Well, I guess this is one range that I'd be looking at here, and this is really simply where I'd say the range has began here to where you are now. You have this going on, but yeah, this is not really tradable, and you have nothing that I'd be looking at there for support or resistance. I don't know, XRM. Yes, XRM I would be looking at. If I was looking at support, I'd be interested in this range here. So for me, this is uptrending, uptrending, uptrending. We start going sideways from here, and I'd be happy to like pull really my from this, because although I could do it from here, I don't think the value is going to be much different. 646. It's exactly the same actually. So yeah, I would be looking at it like this. Okay, value area high, point of control, POC, and then your value area low. So I'd be looking at this range to be acting as support if you pull back that hard. And for resistance, I guess I would, if it's a little bit harder, so I would be inclined to take all of this. Oh wow, yeah, well, okay, so that's pretty nice. So yeah, I would be inclined to take all of that, and that is right there a very, very nice example actually. So we pushed up, hit that point of control to the basically exact sat before getting that rejection. So let me say, why did I select this start at range in the end? And that is because here we had a pattern going on, whereas this was our left shoulder, this was our head, and this was our right shoulder. So we had this head and shoulders pattern going on. Okay, let me just draw it out a little bit better and officially. So you kind of had like this going on, okay, and because this was all part of the same pattern, okay, well, because this was all part of the same pattern is why I'm selecting this one as my fixed range. So really where that pattern began to where the breakdown really started to happen, and then that's why I've selected that as the level. Okay, and then we could mark out your value area low, value area high, point of controls. Okay, and that would be another level that we could mark, and then we could be interested in this level. Okay, and then these are the levels, and then you're gonna again look for confluence. Where are we more likely to reject? There, or there. But that's why I would select that as the range. So that would be my support, that would be my resistance, and I'll do another example. It's just one of these that I'm just like, when I'm doing this myself, I'm just so, it's hard for me to like think, why am I pulling here? Why am I pulling there? I'm just like drawn to it straight away, and I just do it without thinking. Yes, this is another one that I can do. So I would do my fixed range. So this was obviously trending here, trending, and then this is where we started sideways really. So I'd be more interested in looking at this as my range. And I'd be putting here for looking at resistance and support. You're at all-time lows, so it can't really do one. But obviously what I would look at is fixed range. Reactionary, we really can't start ranging from here. So how is this useful? That if we break down from here, if we ever retest, I'd expect this to be resistance before continuing back down. The same if we break up from here, I would expect this. Well, I guess I wouldn't expect it to come all the way down to point control if we broke up bullishly, because that would be a bit weird to come down that low. So then again, I'd be more looking towards value area highs and expecting that if you break up from the range, if you break down for the range, this would be the range that you'd be taking it from, if that makes sense. So yeah, those are quite a few examples. If you have any other questions, just write it in the chat and I will go round through the questions. So yeah, I wanted to end with these two questions specifically, and then I'll go over the questions that you have in the chat on top of this. So two of the questions I was asked today was two questions that I had, and I'll start with this one actually. So I understand that taking the high in the 5 minute would be confirmation. Daniel sometimes mentions 15 minutes, so that's for bigger level. Not clear whether to use the 5 or the 15 minute. Basically, it's kind of like there's no rule whether you wait for trend changes on the 5 minute or the 15 minute or even like the 3 minute. So sometimes I'll be looking for 3 minute time frame changes. Sometimes I'm looking for 15 minute. Things to bear in mind: 3 minute time frame traders are scalp traders, okay? Whereas if you're waiting for a 15 minute trend change, a 15 minute trend change is gonna take like 5 hours, for example. it's going to take a long time to get a 15-minute trend change. So that's obviously clearly going to be more for your day traders or swing traders even. Like a 15-minute trend change is literally going to take several hours to get, you know, the candles up, the candles down, the break back through. So it takes a long time to get a 15-minute trend change. So that's clearly focused on it's just clearly focused on a higher level. Whereas if you're trading off of like a 3-minute trend change, you're a scalp trader, because you're trading really quickly off of like trend changes off of low term time frames. But yeah, on top of that, what I would say is like a 15-minute trend change is a lot less likely to get a fake out. Like you can see, like, let's just use, you know, a 1-minute trend change. Some people are going to trade off of that, but guess what? You can get a 1-minute trend change that then just falls back down and gives you nothing, because 1-minute trend changes is not a strong trend change, is it? Like the higher the term time frame that you're waiting for a trend change, it's going to be a stronger trend because it's a higher term time frame level. Okay, the higher term time frames are stronger levels. So like this is an example. Like here, this for me is not a trend change. So although you have like this downwards candle, the trend is not going from a high, it doesn't make a higher low. This is all one high being made here. So this does not count as a trend change, by the way, on a 15-minute, because it's just keeps going up with higher, it's just going up. So here we go, I'll make a high, and now it's working on a higher low. And then if you break above that, well then yeah, you have a 15-minute trend change sort of thing. And you want a candle close, you don't just want a wick. Whereas look at this, on the 5-minute, you have here a high, higher low, higher high on the 5-minute that just falls down. So you can see the difference. Like if you were waiting for a 15-minute trend change, you're still waiting for an entry. If you actually entered on a 5-minute trend change here, you would have lost your trade, because you get that trend change on the 5 minutes and then it just falls straight back down. Okay, so you can, this is just literally from today's price action, but you can see that like why waiting for a higher term time frame is generally going to give you a stronger reaction. But also it's important to remember that if you're waiting for a 15-minute trend change, you're just participating in less of the moves. And I would say if I'm coming into a really big level, a lot of the time I'll be more happy to wait for a 15-minute trend change, because it's such a big level. I don't feel I need to catch the bottom of it, and I'll be happy to wait for a 15-minute trend change, okay? Because it's a really big important level. I don't feel the need to catch the bottom, and I'm expecting like a big move. Whereas if I'm trading off of like a small level and I know that I'm only going to be trading for, you know, potentially like 0.5% follow through, I'm more likely to go in off of a small time frame 3-minute trend change, because I'm only trading for like 0.5% gain anyway. Whereas if I'm trading from a 15-minute trend change, it's off of a big level and I'm going to be expecting like 10% follow through, so I don't care about missing out on like the first few percent of it. Again, ask another question if that doesn't make sense, but yeah, it's not, it shouldn't, it's kind of like I guess somewhat, yeah, like 15-minute bigger levels, but also you have to just remember that you're going to be taking a lot less trades if you're waiting for a 15-minute trend change. So what type of trader are you? Are you the type of trader that wants to try and get in on lower term time frames and be more of a scalp trader, or are you happy to day trade, or do you want to swing trade? So or do everything. And then the other question that I received was about imbalances and what is the best time frame to look at imbalances. And you know, when I'm scalp trading, I will be checking for imbalances on the 1-minute chart. As soon as we hit the level, I'm interested in, you know, trading. So I will literally go down to the 1-minute chart if I'm looking at a level. Okay, so if I'm looking at a level and I'm, you know, many times you'll hear me say like I have an alert at this level and I'm waiting for confirmation. I don't want to preset bids. So as soon as we hit that level, I'll come down on like the 1-minute chart, the 30-second chart, some low term time frame to get the information that I need straight away. So I'm not going to be sat there on the 5-minute chart if I'm looking for a reaction off of a level that I've pre-planned and ready to trade off of. I want to see it straight away, so I'll be down on the lower term time frames such as the 1-minute. And this was another pretty perfect example actually. But before this question came in, was me answering this. I think this is where the question come from, I suppose. But you know, I gave the screenshot I use off of Exo. And you know, what I like to see is a lot of green imbalances coming off of a high volume sell-off, but that has not happened yet. And so what I'm like saying here is I'm not going to long yet, because I haven't seen the criteria that I want of a lot of imbalances coming in off of the 1-minute chart. Okay, and funnily enough, we did not see any green imbalances, and we dropped down after this screenshot another 1.6%. So it's kind of like, yeah, I will long if I see my criteria. If I've not hit my criteria, I'm not going to enter my long. So I was looking at this level as a key level for me, price come into that level on a high volume sell-off, we got no imbalances, so I never took the long, and it dropped down another 1.5% where we did get the imbalances, and you can take a long sort of thing. So this is really, really key to know. And yeah, to answer that question, I do it off of the 1 minute chart. I look for my imbalances. Obviously, again, if you're a swing trader, you're not going to be looking for imbalances off of the 1 minute chart. It just doesn't make sense. So you are kind of looking for this off of the way that you trade. I can't tell you whether you're a scalp trader, a swing trader, or day trader. You have to make that decision yourself ultimately. So I do this off of the 1 minute chart when I'm scalp trading, clearly. And I'll be looking for those sort of imbalances on the lower term timeframes. So yeah, there we go. Now I envision there's going to be a lot of questions. So let's see. Yeah, it looks like we do. Let's see what we have here then. What do you mean by major follow through on ZRX? I can't remember when I was referring to. I always go on Tezos, ZRX. I can't remember when I was saying major follow through now. I've kind of forgotten when I said major follow through. I really can't remember. I can't remember saying major follow through on ZRX. So I can't answer this question because I honestly can't remember saying about major follow through. Yeah, I'm going to have to move on. I honestly can't even remember saying about it. Sorry. Do you ever use actual values within the fixed range, e.g. 1.91? No, I never ever use that. No, never do that. Do you have to change the settings in TradingView? Yes, I forgot about this. So yeah, you will have to change this slightly. I have custom settings, so I'll double click on this. This is what I have, and I will actually sometimes put it on this now. So 148, and sometimes you can go into 70, but 68 is standard, so you can keep it on 68. And then this is the style. Okay, but yeah, I'm not going into anything else. But yeah, the style I have custom, and the inputs I have custom. So yeah, these are the settings that I use. Just pause the screen and make notes of this. Okay, and what else did we have? What do you mean by untested range, and is it a good way to set limit orders on the fixed range point of control? I'll show you what I mean by untested. So basically, untested is really simply when we have when this example, well, let's go back to this. So like this was an untested point of control because it's never been hit yet. Okay, so untested because it's not been hit, and then now it's been tested. So if you come up to it again, it's weaker, so you're more likely to break through, sort of thing. Okay, so if you do this, the level's weaker and you're more likely to expect follow through. It was untested because it had never been touched when I was originally looking at it. Okay, so this is an untested point of control. You can see it's never been tested yet, whereas now it has been tested. Okay, and is it a good way to set limit orders on the fixed range point of control? No. So you never ever want to be just setting limit orders on the point of control. No, never. With no confluence. Okay, so never ever be setting just randomly limit orders on point of controls. Okay, you have to see more confluence. You have to see more confluence than just a point of control. It's a gamble trading point of controls with no other confluences. 100%. So yeah. Can we use the fixed range for every cluster of candle on price action? I don't really understand what you mean. I would say no. I don't know why you would. Can we use the fixed range for every cluster of candle on price action? No, I don't really understand the question so much. I would say no. You don't want to use it on every I guess if you're within the range, then if this is what you mean, so when you were like, if you're on about like every candle of the cluster, then yes. So every candle within that range cluster, however you want to refer to it as, yes. Whereas, so I think that's what you mean, the range. And then, so yeah, you want to use it on every candle within that range. And the other question was, what are my settings? And I've shown those settings. What else do we have in here? So what would the difference be between fixed range and visible range? I know the point that you choose manually that you manually choose the range, but should visible profile a point to check we draw it in the right positions. So the difference is that this visible profile is just going to be capturing everything on the screen. So I'm going to get everything here on my screen, the value area high, the point of control, and the value area low of everything. But I'm not interested in everything. Okay, so I'm only interested, let's say, in this area of the resistance. Okay, I only want to know where the resistance is here, and I only want to know where, let's say, support is here. Okay, so I'm only interested, and funny enough, you can see here how this is a high volume node, and this is also another high volume node, by the way. But yeah, I'm only, this visible range is just going to show everything on the screen, whereas I'm not really ever interested in just everything. I want to get more specific, so I want to see specifically this ranges. Okay, this range information. I want to see specifically this range information. Okay. I'm getting lost in all my stuff. So yeah, that's the difference. But you could, I suppose you could use the whole range. So when, as you saw there, you can use this. I suppose I've never used it like this, but I guess this is a good way to verify that it's likely. You got, you're obviously not going to see exact information, but if you see this high volume nodes here, then it's likely that you got that coming in here. But I've never used them using this to verify it. But yeah, you could actually do it like that if you wanted to. Then on the WRX example, you did a fixed range about a narrow body candlestick with long lower wick on how to know where the volume came on the candle. I don't really understand. No, so that was not meant for this. So I was not referring to, on this WRX example, being able to use this fixed range to know where the actual candle is. That is footprint charts. So what we can see, okay, this is what we're coming to in the coming weeks. Okay, but you can see here, if I zoom in on this candle, then I can see visually, okay, so at 6,868 we had 4.8 million transacted at this price. At 670 we had nearly 2.5 million transacted at this price. So this is like a footprint chart where you can see the statistics. So you can't get that in TradingView. So yeah, that WRX example was actually not supposed to be looking at where that's coming in. If the lower value area, if the lower value range is close to the point of control, would we consider that a stronger area for a bounce? Not really. I wouldn't say it's stronger. If the value area low is really close to the point of control, which you will see sometimes, doesn't really make it stronger. It's just I honestly wouldn't say it's a stronger level. I would just say it's maybe I would take the average, so take the high and the low, and then just look at the average. If they're relatively close together, then rather than looking at, you have to think it's never a exact point in the sand anyway. So I'd be more inclined to just take that as a range. I wouldn't say I would say it's a stronger level, but if again there's lots of confluence around it, then yes. But yeah, if they're together, I wouldn't say it's a stronger level. No, I would just say that they're next to each other, but I wouldn't say it's a stronger support or resistance. I wouldn't say that. So yeah, the answer no, I wouldn't say it's a stronger level if they're close. If we are inside a range, for example sideways channel, can the fixed range inside the channel give me probabilities in which direction it will break? No, not really. So no, you have to remember that this fixed range tool is only giving you past information. It's not like a leading indicator. You are only getting information from the past. So I wouldn't say you would use the fixed range tool for predicting which way it's going to break. You would have to use other information. You wouldn't be able to really. Yeah, you would have to wait for a break. Okay, so let's say you had your point of control at the low of the channel, and then you broke out of that channel. Well, that clearly it's already broken out, and you're more likely to get follow through because a lot of trap traders. But in terms of using the fixed range to predict which way it's going to break, no, that's not possible. I wouldn't say. You'd have to use other tools for that. This tool is like a lagging indicator in that regard. It's only telling you past information. It's not going to really. While you're still within that range, I couldn't just do this right now. I couldn't just do this and say, right, I think we're going to break down. So this isn't going to tell me which way a range is going to break. It's just telling me where all the volume thus far has come in. Okay. But then obviously if we have like the point of control near the lower of the range and we do a breakout above the range, you're more likely to get strong follow through because you then have a lot of trap traders at the lower of the range, if that makes sense. But yeah, it's not going to help you decipher which way it's going to actually break. Cool. So those are all the questions thus far. Let me just do a check as well. I'll load up those settings. People are still asking. Oh, right. So you were asking about session volume. Sorry, Dario. Okay, so the difference between session volume and fixed range is that session volume is just going to give you your ranges off of the sessions. So, for instance, if you're on a daily chart, then it's just going to be pulling you through the information off of that day. So they are different in the regards that session volume, so the VPSV is just going to give you off of the session, whereas the fixed range is if you know, it doesn't matter if this is occurred over like 1.75 days. Okay, I'm gonna just take the information for what I want. It's not, it's all manually done. It's not something an indicator. Whereas the VPSR is gonna like automatically give you all the information. Whereas I'm interested in a specific area. So yeah, session volume is just all automatic. It's just going to take it from the session that you're looking at. Whereas if you want to actually know specific information, then you have to use the fixed range, and that's the difference. Sorry, it was my brain. I didn't see you were mentioning session volume. But yeah, that's the difference. The session volume is just all automatic, whereas this is we're actually looking at specific areas on the chart. Can we say it's much easier to use the fixed range for swing trades? I guess it's easier. I mean, when I'm referring to it's easier, it's just like easier, or you have in higher term time frame trades, you just have a higher probabilities that levels are going to hold. You get less fake outs. The levels are stronger because more people have participated in it. So yeah, I would say like the fixed range is nice for swing trades. Yeah, I think that's what you mean there by can we say it's much easier to use the fixed range for swing trades? Yeah, I think in terms of like visible range and fixed range, I'm only really using fixed range, so I would say it's a lot better and important. Do you also use the point of control of the actual range as a level to yes, 100% yes. Okay, so if we were looking at this range that we're on right now on this coin, for example, okay, the actual range that we're in, this point of control is now a really big resistance. Okay, so we are well below this, we are somewhat bearish. Okay, and this is a big level to claim to push up to the highs. So this is a big SR level within the range. Okay, so if we're looking for longs up at the lows and shorts at the highs, so if we're trading like this point of control here is a really big level. Okay, so if we're longing here, we'll take profit here. If we're shorting here, we're taking profits here because of the fact we either envision this or this to occur. Okay, because the point of control is a big level. Okay, you can definitely do this and you can do like this. So yeah, this is a big SR level within the range you're trading, as you can kind of see somewhat. I don't know. Well, actually, this is quite a nice one because it does seem like it's been going low, high, low, high, low, maybe come back up to the high sort of thing. But yeah, nevertheless, you've got to be taking profits on this point of control. It's a big level. And yeah, so it's a big level to reclaim. So you could say, yeah, 100, yeah, definitely this is a big level now, big resistance. So you obviously, if you're in a long, you want to see that claim to go back up to the highs. Yeah, so good question. And that is the last question there that has come in. So yeah, thank you everybody. I hope that you've enjoyed this one. And yeah, it looks like that is no more questions. And yeah, so didn't try and do that. Yeah, so that's all the questions that have come in there. Thank you everybody so much, and I hope that you have enjoyed this one and found it helpful. Is there anything else that I wanted to add? Thinking. I think that is everything. Yeah, I think that's everything that I wanted to cover. Obviously, it was a bit of a different one this week because I couldn't actually really prepare the so much like cheat sheet sort of thing in that regards, because it's just one of these tools that is just, it just comes with a lot of time and experience. Honestly, just go out and use this tool, use it like every day in your trades. First you need to know how to identify a range, I suppose, but you know, it's one of these tools that just comes with time and practice, and the more you use these tools, the more you're just going to be finding these ranges easier and easier and easier to trade. But yeah, this tool in particular is really hard to describe exactly how to use it. It's just one of those that comes with a little bit more time and intuition of identifying these ranges. And it's really, really, really powerful, as you can really honestly tell from this one. Okay, from literally being able to, you know, say that's where our resistance is, and I'm looking for this level to be support, and then we do this, hit that to the dollar, hit that to the dollar, get rejections and get bounces. I mean, you can clearly see how amazing that is. Yeah, so that's all I wanted to add in this one. I hope that this has been thoroughly helpful for you all. Thank you once again. I suppose, yeah, look forward to the stream that I'm going to be doing with Igor. That's going to be a good one. And yeah, cheers everybody. Have a brilliant evening and enjoy yourself. Thank you. Cheers and goodbye. Bye.